Hello, everybody, and welcome back to another technical analysis episode. Today is Monday, and as always, we're going to start with the screener, right? So let me just quickly look at the screener, right? Before we actually dive deep into what the screener is, what it does, and what you can take away from it, please make sure to head on over to the YouTube channel and hit the subscribe button. And if you enjoy the content we put up and want to stay updated with the hardest twins, make sure to click on the bell icon as well. But you can also give us a follow on Twitter at FXS Crypto, and if you like the stuff that I do, you can follow me at Mongeko with a zero at the end. Right, so back to screener. As I mentioned in each of Monday video, the screener contains a couple of important metrics that I kind of pay attention to. The first one is the volume. Volume is extremely important, and a spike in volume is often followed by a spike in the asset's price as well. So taking a look at volume is often helpful in probably determining or catching the pumps before they actually happen, right? If you combine this, again, standalone, volume is not such a good indicator of, it's not a good indicator to forecast pumps or like drops. But if you combine it with enough indicators, I think you would have a system which you could completely rely on, right? So for me, that is the daily active addresses. Right, daily active addresses basically gives you an idea about what's happening with the investors and the blockchain. So if the daily active addresses is seeing a massive spike, there's a good chance, so if there's a volume spike and then there's a DAA spike, then there's a good chance the price is going to pump as well. Right, there are a couple important stuff here which kind of have to take into consideration. The first one is the MVR with 30-day. This indicator basically gives you an estimation of the investors that purchased the coin and if they're in profit or in loss. If they're in profit, obviously they could sell and there could be a potential sell-off. And if they're in loss, there's no risk of a sell-off, which kind of indicates that it could be in a good place to buy. Right, again, exchange inflow, as the name indicates, it indicates the amount of coins flowing into the exchanges. If this number is high, then the chances of the price selling off is high. For example, a spike in volume and a spike in exchange inflow addresses could indicate the volume is a result of investors sending their tokens to exchanges in order to sell. Again, a spike in exchange inflow doesn't necessarily mean that they are sending the assets to exchanges to only sell. They could also be using it to probably use as a collateral to their already existing position. So they could be using it to stake on exchanges and some kind of stuff. So that pretty much completes my explanation of the screener. Let's go ahead and take a look at the coins that we could probably, so considering how the market is bearish right now, like you have to take all of these coins with a grain of salt. That said, I do believe there's going to be a minor upswing in Bitcoin price, and that's where that's when I think these coins could pump a lot. Right, so instead of Dawn, I want to do Near because Near has a lot more potential than Dawn because Near is well known and the ecosystem is booming. Right, so let's take a look at Dawn first, which is TON for that. Okay, it's a relatively new coin. Let me see if it's the actual. Yep. Right, so Dawn moved below the support level here at 1.82 and then spend the time below there. So basically, this is another perfect example of how ranges play out. So basically, Dawn formed a range extending from 1.8 to 2.4, and then the price slipped below the range low, which is usually happens to collect liquidity. And this down here collected liquidity below these lows here. So now that it's moved back into the range, if we get like a stable support over here at 1.8 or a consolidation, then there's a good chance price could head higher and collect, at least retest the 0.5 fib or the 50 retracement level here at $2.1. If we're lucky, there is a chance price could head all the way up to 2.4 and sweep the highs, right? These are the things that I'm expecting, right? But because there's not a lot of price action, we can't predict where the price is actually going to go. So based on that, Right now, it's bounced off the to minus 2.27 retracement level here. But if we do not get a support at 1.8 and the price comes back lower, there's a good chance price could like form a triple tap setup here, which would include a formation of a low and then deviation below the low. Or let me just take this off so it's easy for you to understand. All right, so there is a chance it could form a triple tap setup, but then again, if the 0.27 retracement level fails to hold at 1.6, there's a good chance price could come down to 1.41. So that is pretty much it for TON from a technical standpoint. The downside could, for now, the downside is capped at 1.8, but if that fails, we could revisit 1.6, and the ultimate like price discovery mode, TON could head down to 1.41. As for the upside, you could see TON heading up to 2.15, but in a highly bullish case, we could see it come up to 2.47, which is the range line. Let's move on to the next coin, which is Orbs. So what's happening right now is, again, like I explained in the previous video, which is for TON, what usually happens is there's a range that forms after price does something like this, and then the price either sweeps the range low, recovers above it, and then makes a run for the range high, or the price forms the range, sweeps above the range high, and then comes back lower, sweeps the range low. And what's happening right now here with Orbs is exactly this one, the second case scenario, where the price swept the high first, and now it's making its way towards the range low. So, but considering how the indicators are kind of indicating that there's a decent amount of spike in volume. There's a decline in the electrical resistance, which is not great. But as you can see here, MVRV, both 30-day and the 1 year, are in the negative zone, which means that there is a lot of investors are at a loss. So considering that, and considering how there was a decent amount of support around here, there you could see a minor swing up to 0.66. Right, this would be a good 12% upswing. Right, that's honestly doable. Right, it could be a pretty quick scalp because the price is stabilizing above the support level here at 0.05. So yeah, for now, let's not predict swing highs and like swing trades. I think scalping would be the best way to go right now. And what you're looking at is a good 12% upswing for Orbs for the next 24 hours or so. Right, let's take a look at the next one, which is near. Right, so near kind of failed to move above this resistance level here, extending from 11 to 12. And since then, it's fallen below that, formed some sort of a base around 10.37, and it's attempting to move higher, right? But I feel like we're going to get rejected. Like there is a good chance price could head up to like a 5% upswing, 5 to 6% upswing. But then I feel like we're going to get rejected around here and then come back down to this support level here at 9.51. Right, and again, like as I mentioned, right, the triple tap setup here, the opportunity was there back here. Like this is the first low, deviation below the low, and then we got a retest of it, and the price moved higher, collected liquidity was above this, but it kind of failed to move above these highs over here and collect liquidity. So this liquidity is completely untapped. All right, so that said, if we get a bounce off of the 9.5 level, I think there's a chance price could move up and retest the $12 level. Right from here, this run up would be a 25-30% upswing. But once we get a recovery above the $12 resistance level and flip it into support level, I think the next level would be to collect liquidity resting above this high over here at $20 or so. As for the downside, if we break down below 9.5, there's a good support at 8.02. Again, right, let me just, so this is done, right? There is another possibility for triple tap setup. This is the first tap, this is the deviation. And so even if you go down roughly 27% from where we're right now, I think $8 would be a really good buy because this would again set up a triple tap setup, which would allow near to go to $20, right? I've explained both scenarios where there is the extremely bullish case scenario kind of predicts like a 30% downswing first, followed by a 150% upswing, right? Another extremely small shorter term scenario kind of predicts a 5 to 6% upswing from where it is right now, right? So roughly 8% upswing is what you can expect from near. And on top of that, on a 4-hour time frame, you can see a clear bullish, bearish breaker from here. Right, so what you could do is, if you are like scalping, if you can stay glued to your charts, you can just do this, and the profits around here, which is a good 9% downswing. You could short it, 1.5-hour trade. Looks pretty neat, and if you are willing to like risk it a little bit, I think there's a good chance price could head down to this level again. So yep, anywhere from 1.5 to 2.5-hour trade is what you're looking at for near. All right, so let me just quickly do a setup. I want to take this trade 11.85. Okay, cool. So that is pretty much it, guys, for the screener again. If you enjoyed this content that we put out every Monday and other content that we put out almost on a regular basis, please make sure to hit the subscribe button, click the bell icon, make sure to like, comment, and again, subscribe.